with you, specifically talking about Bitcoin and what's happening based on M2 global liquidity and what this means for XRP, looking at Confluence to the past as well too. So global liquidity, M2, what that is a broad measure of money supply on a global scale, where M2 in traditional economics is a measure of the money supply that includes cash, check deposits, and easily convertible near money assets like savings accounts, money market securities, and small time deposits, typically under $100,000. And it is a key indicator of liquidity. So how much money is readily available in the economy for spending or investing. And if we talk about global liquidity, that is the most broad indicator that tells us how much liquidity is sloshing around in the system that could directly affect the crypto market. So for example, with this picture right here, it shows M2 in yellow and the price of Bitcoin in orange, and M2 is offset by 107 days. Because if we put up the M2 chart right here next to Bitcoin, we can see a discrepancy here, where you can see right here on the 30th of September, M2 peaked out, whereas Bitcoin was finishing its final consolidation phase and then breaking out after that. So M2 moved before Bitcoin did, and then Bitcoin moved after that while M2 was pulling back. And so if we just offset this by 107 days, it lines up pretty closely with what Bitcoin is doing right now. And it shows that by the 30th of April, 2025, with the recent breakout in M2, could we see Bitcoin follow that? So number one, will Bitcoin continue to follow the mini rally that fails as pictured and then blast off later? This would validate the 107-day offset. Number two, or will Bitcoin blast off immediately? This would validate the 70-day offset. So regardless of which offset for global liquidity is right, the big picture is that a massive 2-month long M2 liquidity injection is coming our way. And it could go for longer if M2 keeps going up. That's mega bullish, because if the breakout from the 5th of August all the way up here to the 21st of January for the recent bull rally in Bitcoin was from this global liquidity injection from the 29th of June all the way to here to the 2nd of October, that's just a little delayed in the market, well then arguably this pullback from the 30th of September all the way to the 13th of January for M2 is what caused this pullback in the price of Bitcoin right here, and we're just lagging behind, which is what the offset is. So for example, at the top of the screen, from roughly the 17th of January, the 18th of January, to where we're at now, we've seen global liquidity break out, but yet we haven't seen Bitcoin and the rest of the market break out. And so if we see this offset from global liquidity to the crypto market come into effect, then could we see Bitcoin break out? Or is the crypto market now inversely correlated to global liquidity, which would be very strange. So what we're looking at right now with the recent pullback in the price of Bitcoin is very similar to this pullback right here, which is why a lot of people believe that rally from the 23rd of November in global liquidity to the beginning of December, right here where I'm circling on the chart, is what we're going through right now. We could technically experience a short-term pullback in the price of Bitcoin before working through this range, then inevitably breaking out like what we had to go through during this phase right here from 23rd of November to where we're currently at for M2. Because if I just clear the drawings on the chart right here, you guys can see for global liquidity, this was just simply a double bottom trend reversal where you can see bottom number one right here. You see the neckline right here by the end of November. You see bottom number two right here. We broke the neckline, back tested it as support, and then saw a trend reversal to the upside for global liquidity. So for Bitcoin, where would the neckline be? Well, the neckline, simply put, is roughly right around like 91-ish $1,000. And so we broke below the support, which is the neckline. We rallied back into it really quick with Trump announcing the strategic crypto reserve, Solana, XRP, ADA. Then we sold off. So this is technically bottom number two. Or if we want to consider the 12th of March, the first bottom in this rally right now into the neckline, what happened right here for global liquidity based on the offset, well then if we see it get rejected from roughly $91,000 and then do something like this for a second bottom, a lot of people would be very fearful at this point right here, calling for Bitcoin to drop even lower, similar to what happened around this stage in the market cycle right here in the middle of August, all the way until like October, where Bitcoin was hovering right around $25,000. I remember this like it was yesterday. So many people thought that Bitcoin was going to break below $25,000 and come back down to $20,000 when that's not what happened. It was just building a base, forming higher lows and higher highs until inevitably we broke out at the tail end of October in 2023. And so in my opinion, I think that's what's coming for the market for Bitcoin. I think this rally may be a failed rally and we'll come back down for a double bottom, which could be a higher low. But I think we're just going to work our way through this range right here inevitably break out for a trend reversal to the upside to form new highs for Bitcoin leading into Q3 and Q4 of this year. It's just going to take some time to play out. Because in the recent FOMC speech, Jerome Powell talked about tapering off their quantitative tightening and not steeply selling off of their balance sheet. And he also discussed inflation coming down, which would be another signal for them to lower interest rates. And if we couple this with the charts to look for any confluence here for what XRP is going through compared to what it went through in the past, it reminds me of what happened, like I've shown you guys a few times, from May of 2017 until December of 2017. If we bring up these three key indicators here, we see some similarities. For example, when XRP pulled back from 40 cents all the way down here to 13 cents, we saw the stochastic RSI pull back as well too, well below 20, and stay below 20 until roughly the 28th of August. And if we look on the left-hand side of the screen, we see the pullback from all the way up here from $3 and nearly 40 cents all the way down here to about $1.79, rally back up, then sell off back again to $2.60. We can see the stochastic RSI come all the way down here below 20 as well too. And if we look at the relative strength index, the RSI peaked out up here at 93 with that first rally for XRP. And on the right-hand side of the screen, the RSI peaked out at 93 for that rally, upwards of 40 cents for XRP as well too. And it pulled back with that sell-off right down to roughly 48. And during that whole consolidation period, XRP stayed above 50 on the right-hand side of the screen right here, which is a great sign during a bull market. And we're just doing the same thing on the left-hand side of the screen. The RSI pulled back and it dipped down to 53. We're currently at 57. So in my opinion, as long as we stay above 50 while we consolidate sideways for a bit with Bitcoin, that's a good sign for XRP. Now, the conflicting indicator that we can see here that shows us the opposite of what happened on the stochastic RSI, because as you guys know, anytime we're below 20 on the stochastic RSI for the K line, the D line, it signals that we are in oversold conditions. But anytime we are well above the zero line, forming a bearish cross, it signals that momentum has shifted from bullish over to bearish. So on the bottom left-hand side of the screen, we can see the MACD recently formed a bearish cross at the beginning of the month on the 3rd of March. Now look on the right-hand side of the screen. We saw the exact same thing happen on the 10th of July of 2017 when the stochastic RSI was falling below 20, the MACD was forming a bearish cross, while XRP's price had already bottomed out at 13 cents. So while the MACD was slowly dropping here, the RSI was holding a support above 50. The stochastic RSI had already bottomed out and went sideways. We experienced a bullish cross on roughly the 14th of August of 2017 for this higher low right here. And then XRP just simply coiled up between resistance, support, resistance, support, resistance, support, forming higher lows, and resistance at roughly 29.30 cents right here before breaking out on the 11th of December. The MACD formed a bullish cross above zero, blasted off to the upside. The RSI broke out from 56, coming all the way upwards of 96 on the next breakout, and the stochastic RSI formed a bullish cross and blasted to the upside well above 80. And so we just have to look for confluence here. So on the left-hand side of the screen, the K line is at 12, the D line is at 9. We experienced a bullish cross. It's not confirmed unless we pass above 20. The RSI is currently in a downtrend right now, but holding above 50. And the MACD experienced a bearish cross, which tells me we're about to go through something similar that we went through roughly right around here during that 2017 summer. And as you guys know, XRP does follow Bitcoin and also liquidity. So if we see Bitcoin get rejected from this neckline right here, roughly $91,000 of resistance, and come back down for a double bottom, well, what I would expect to happen for XRP is for XRP to pull back as well too, similar to what we saw right here when XRP bounced from 12 cents to 20 cents and then pull back just for a higher low right here than the low of the 10th of July, before bouncing off of 15 cents to 30 cents and then just coiling up right here, forming higher lows. That's what I would expect for XRP. So I would just want to see XRP form higher lows over the next few weeks. Even if we see a sell-off right now, it's not the end of the world. If XRP holds above $2.70, I would just expect this to coil up and do something like this. Because the stochastic RSI is oversold, yes, the MACD did experience a bearish cross, but it's no different than the bottom right-hand side of the screen of what we went through right here with this bearish cross. A longer consolidation phase for XRP of higher lows, even an equal high right here, would just give time for the MACD to reset a little bit further because we just experienced this bearish cross. And also, the stochastic RSI is in oversold conditions. Where I'd be a little concerned here for XRP is if we were all the way up here for the stochastic RSI above 80. The MACD was experiencing a bearish cross, and the relative strength index was above 70 as well too. But we're not seeing that right now. We're seeing the stochastic all the way down here, very similar to where we were all the way back here on the right-hand side of the screen. The relative strength index is at 57, very similar to where we were right here on the right-hand side of the screen. And even though the MACD is just barely into this bearish cross, we saw the exact same thing happen between the 10th of July all the way until the 4th of December, with the MACD dropping while XRP was forming higher lows. So I think this is just going to be a long consolidation pattern, potentially a symmetrical triangle for XRP to coil up here until the Fed drops interest rates and starts easing again and adding to their balance sheet for the next breakout for XRP, which I covered in a previous video. That would be the perfect storm of opportunity, in my opinion. So this is what I'm expecting next for Bitcoin. So when you see the markets pull back over the next few weeks and sell off for Bitcoin, and it comes back down to $80,000, don't be shocked, because this would just simply be based on the 107-day offset from global M2 money supply.